In this video, we'll decode Budget 2025 in the simplest way. No praise, no blame, just facts. A clear, unbiased breakdown so you don't miss a thing. Welcome to mindsync, your compliance guard. Mindsync is a professional organization providing compliance, consulting, legal and advisory services. Welcome to this detailed breakdown of the Union Budget 2025 to 26. To make it easier for you to understand, we have divided it into 4 major segments. First, let's look into direct taxes. One of the biggest updates in this budget is changes in income slabs and tax rates. And here's the revised structure. A key highlight is that individuals earning up to Rs 12 lakhs effectively pay no tax due to the nil tax benefit and deductions available up to Rs 12.75 lakh for salaried individuals. So, the 10% tax rate applies only to income exceeding Rs 12 lakh. Next, employment and investment incentives. The budget also introduces tax certainty measures for various sectors, including electronics manufacturing schemes, ensuring stability in tax rates, tonnage tax scheme for inland vessels, promoting domestic waterway transport, startup support, extending incorporation benefits for 5 more years, IFSC benefits, offering special tax incentives to ship leasing units, insurance offices and treasury centers in international financial services centers, alternative investment funds, tax certainty on gains from securities for Category 1 and 2 investing in infrastructure, TDS and TCS updates for FY 2025 to 26. Several important changes have been made in tax deducted at source and tax collected at source. For senior citizens, the TDS exemption on interest income has been raised from Rs 50,000 to Rs 1 lakh per year. For rental income, the exemption limit has been increased from Rs 2.4 lakhs to Rs 6 lakh per year, benefiting landlords. For education expenses, TCS on education loans from specified institutions is completely removed. For self-financed education abroad, the TCS threshold has been raised from Rs 7 lakh to 10 lakh. For international transactions, the TCS threshold for foreign remittances under LS has been increased from 7 lakh to Rs 10 lakh. Indirect taxes, major reforms. This budget brings significant changes to the tariff structure, reduction of tariff rates from 7 different rates to a more simplified structure. Only one cess or surcharge will apply to avoid multiple layers. Customs duty rationalization, ensuring effective duty incidence is maintained on most items while reducing cess on selected items. Sector-specific proposals. Make in India exemption for open cell panels used in LED or LCD TVs. Tax benefits for looms in textiles and capital goods for lithium-ion batteries used in mobile phones and electric vehicles. Shipbuilding and exports. 10-year exemption on goods used for shipbuilding, relaxation on time limits for exporting railway goods imported for repairs, export promotion, duty-free inputs for handicraft and leather sectors, trade facilitation, new rules for voluntary declaration of material facts post-clearance, amended IGCR rules extending the time limit to 1 year, and reducing the compliance burden. Next, let's look into ease of doing business. This budget introduces measures to reduce litigation and improve tax compliance. Safe harbor rules expanded, providing tax certainty for international transactions. TDS or TCS rationalization, simplifying tax collection procedures. Senior citizen benefits, doubling the tax deduction limit from 50,000 to Rs 1 lakh. Updated tax returns, extending the filing window from 2 years to 4 years to encourage voluntary compliance. Access to life-saving medicines. 36 new life-saving drugs added to the exemption list, 6 medicines placed under a reduced 5% duty slab, 37 additional medicines, and 13 new patient assistance programs added to the exempt list. This includes medicines for rare diseases, cancer, and severe chronic illnesses. 4 engines of development. The government has identified 4 major growth engines to drive the economy forward. Agriculture. First engine, PM Dhanjanya Krishi Yojana. Developing 100 agri-districts to enhance productivity, improve irrigation and facilitate crop diversification. Fisheries growth, expanding India's exclusive economic zone and high seas to boost seafood exports. Mission for Cotton Productivity, a 5-year program to improve cotton farming and promote extra long staple cotton varieties. MSMS, second engine, Here is the revised classification criteria. Enhancement for micro and small enterprises from 5 crore to 10 crore, adding 1.5 lakh crore in additional credit. For startups, increase from 10 crore to 20 crore with a 1% guarantee fee in 27 focus sectors. For exporting MSMS, term loan coverage up to 20 crore. Funds for startups, 10,000 crore additional contribution under the alternate investment funds. Investment as third engine. First, investing in people, Anwadi and Poshan 2.0, enhancing nutritional support for 8 crore children and 1 crore pregnant and lactating mothers. Etla Tinkering Labs, 50,000 new labs in government schools over 5 years. Bharatnet expansion, providing broadband connectivity to all government secondary schools and rural health centers. Infrastructure support for states, 1.5 lakh crore interest-free loans for capital expenditure. Asset monetization plan 2025 to 2030. The second plan will be launched to pull out back capital of 10 lakh crore in new projects. Jeevan Mission, 15 crore households representing 80% of India's rural population have been provided access to potable tap water connections. Research, development and innovation. To implement private sector-driven research, development and innovation initiative, 20,000 crores have been allocated. EM Research Fellowships. Over the next 5 years, the government will offer 10,000 fellowships for technological research at IITs and IICs with increased financial support. Gene Bank for crops germplasm. The second gene bank with 10 lakh germplasm lines will be set up for future food and nutritional security. Next, exports. Fourth engine, export promotion mission. Government will set up an export promotion mission with sectoral and ministerial targets driven jointly by the Ministries of Commerce, MSME and Finance. Also include Bharat TradeNet and Global Capacity Centers. Next, policy updates. Let's begin by looking into the sector-wise allocation of the union budget. Defense takes the highest, followed by rural development. The budget aims to balance economic growth with social welfare by prioritizing reforms, fostering innovation, enhancing investment conditions, and ensuring inclusive development. Now, let's look into the fiscal policy. The revised estimate for 2024 to 25 of the total receipts other than borrowings is rupees 31.47 lakh crore, of which the net tax receipts are 25.57 lakh crore. The revised estimate of the total expenditure is 47.16 lakh crore, of which the capital expenditure is about rupees 10.18 lakh crore. The budget seeks to strike a balance in development by prioritizing both economic growth and social welfare. It is dedicated to implementing reforms and fostering innovation to cultivate an optimal environment for investment, fortify the competitiveness of Indian industries, and ensure that the benefits of growth are widespread and inclusive. Next, financial sector reforms. Several key reforms have been introduced. Gramin Credit Score Framework to facilitate rural credit access, NABI FID to establish a partial credit enhancement facility for infrastructure corporate bonds. A revamped central KYC registry will be implemented in 2025. Streamlined merger approval processes for faster corporate restructuring. FDI limit in the insurance sector will be raised from 74% to 100%. Other key tax and policy updates. No changes in corporate tax rates. Tax benefits for eligible startups extended for those incorporated until March 31, 2030. Tonnage tax scheme extended to vessels registered under the Inland Vessels Act 2021, engaged in inland water transportation effective from April 1, 2026. The time limit for tonnage tax applications has been reduced to 3 months from the end of the quarter in which the application is received. For any doubts or clarifications, feel free to contact us. Thank you.